Hello and welcome back to another episode of the Commerce Podcast with Georgia Zigas. Today I'm accompanied by Michael Green, a very successful investor.
Hey there.
We're going to talk about investing in shares. We will look at the stock market, discuss 5 companies for new investors, and share an important tip that could help you when investing. So Michael, tell us, what is a share?
A share is a part of percentage ownership in a company or a financial asset which is divided among a number of people. When an individual buys a share, that can be classified as a form of investing.
Thanks Michael. Where can we invest?
Investments can be made on the stock market, also referred to as the share market. It's where you can buy, sell and view shares.
So people invest their money in order to make a profit, to buy what they want.
However, watch out for risks when investing.
The share market can fluctuate, so share prices can go up and can also come down, which means people can lose money. Also, watch out for online scams and hackers who can manipulate your accounts and decisions to steal your money. If you are a new investor, here are 5 companies we think you should invest in. Let's start with Commonwealth Bank, CBA. It's Australia's largest bank and is a strong and reputable company whose share prices have been increasing at a stable rate. CBA also held strong through the GFC and COVID-19. As shown on their website, CBA is strong in financial services, innovation. For example, they offer many apps and scam alerts. They support the environment with green home loans and are certified carbon neutral according to the Australian government. As shown on the ASX market game, the stock prices increased from $80 to well over $100 throughout 2021. As a result, I made a profit of around $45 from just holding on to CBA stocks.
Wow, that's amazing, Giorgio. Next up, we have BHP, the second largest mining company in the world, and is another highly regarded Australian company. Although BHP's share prices has dropped significantly, this creates an opportunity to buy low and sell high. BHP's share price has slumped 9% over the past few years, but according to Entrepreneur.com, it will rise again. It's a good time to buy as the ASX graph shows the low share price. I invested around $37 a unit and still made over $200 profit when I sold at a higher share price.
29Metals, a copper mining company, does well with investing as they are an essential part of Australia's economy through exports, a clear reason to invest in them. Articles from 2021, Fool.com.au and AFR.com states that 29Metals stock prices have risen 12% and continue to rise, revealing that it's a share to hold on to. The ASX all-time share graph continues to rise, so beginners can easily invest in. I made a profit of around $88 after buying shares for under $2.
I would also recommend investing in Pilbara Minerals, which is a lithium mining company, and as you know, lithium is the ore of the future as it's critical to renewables. According to Fool.com.au, Pilbara's share prices have increased 33% from 2022. A significant increase is expected in the future, potentially creating a successful investment. After buying a handful of Pilbara stocks on the ASX market at around $3.50, then selling them for a bit more, I made a profit of over $1,000. I easily predicted the share market by observing the past trends. BHP, 29Metals and Pilbara Minerals are the mining companies which impact the environment and add to greenhouse gases. However, they are committed to improving the environmental impact and creating better and safer workplaces for their employees.
I have also invested in EQT, a private American equity company which owns healthcare, technology, real estate and other service companies in stable and successful industries. This means that if a market crashes, EQT can stand strong. Reviews on Glassdoor.com give EQT a 4.5 out of 5-star rating, and 95% of employees would recommend working at an EQT group. EQT is an ethical business as shown through its values of trust, teamwork, care and evolution. With its many healthcare companies around the world, it is ethical and helps people and our environment. EQT's graph decreases then suddenly increases significantly. The aim is to buy low and sell high. I made a profit of over $5 from the ASX share market game in just 2 days from buying low and selling high.
So what are your reflections, Giorgio?
Doing your research on companies before investing any money is really important. Stock prices can fluctuate a lot, so don't invest more money than you need. Research the company well and understand the business, future plans and ethics. Look at their past performance and trends. However, note, it's not a predictor of the future.
So what's your number one tip for new investors?
It's not just about timing the market, it's also about time in the market. This means you should not expect larger profits immediately. In reality, it's safer to buy low, wait over time and sell high for a profit. Thanks for joining us, Michael.
Pleasure.
And I hope our listeners enjoy this podcast.
Bye.